Ahoy there, trader, and welcome to the Analysis Edge for Wednesday the 17th. This one's going to be one of today's, Warsh's first official outing as the Fed chair, and the whole market is holding its breath, probably for no particular reason whatsoever. There will be a room full of clever people this afternoon trying to read his words, his phrasing, the pauses between his words, and I'm not going to basically play that game. I'm just going to follow the money, trade the charts like I always do. So let's take a look at what we're going to look at. Now, a couple of things before we get into the charts. The all-time highs are being nibbled at again, while the cash sits kind of unchanged. We're not really getting there. So personally, I'd expect a little bit of a kickback, a little bit of a retracement before we see some further pushes to those highs. The big question I keep coming back to is this: has the war trade unwinding actually finished, or has it overshot itself in the other direction? I don't really have a clean answer for this just yet, and that's fine because, that's the honest answer. I'm not afraid to say I don't know. But what we do have to keep our sanity is follow the charts. The charts are going to tell us, the money's going to drive what the charts are doing. So keep your sanity rather than trying to guess at what the macro is going to do. So quick look back at some of Tuesday's trades, several of Tuesday's trades for that matter. We had some great trades on the S&P. We had some great trades on the Russell from the premium popper strategy. You can see the new software on the Russell there, and you can see the new scorecard software on the S&P. Basically, we had multiple trades on our breakout trading system. And again, even though the market just meandered sideways on both the Russell and the S&P, the time decay works in our favour. Because we're selling premium, we're going to get positive. Now, I have to admit, I did drop the ball on crude oil and on gold. They were oil was completely off the mark, so that was a loss. And the gold, it was the right read, but I chose the wrong strike, so it was a loss by a cat's whisker. Overall, net positive on the day, which is all that matters. And what we need to do is ultimately check that ego so that we can just move on and look for that next trade. And it's a good reminder that in the options game, you can be dead right and still lose money just as easily as you can be wrong and still make money. And fortunately, it's usually on the profit side of that equation. This time, I was right, but I gained a little bit greedy. I chose some aggressive strikes, it just didn't work out in oil. Completely just dropped the ball on that. So, quick frame for the day. Warsh has his first chair. The FOMC decision lands at 2 o'clock. The dot plot has its debut press conference at the 2:30 mark. And that event has basically been what the whole week has been positioning at. A hold price then is near certain, and a fourth in a row. So the dots and the tone are the real event, not necessarily the rate itself. Now the 2 years still sitting above the policy rate pricing as the hike, while the 10-year has slid into a 3-week low. So the curve is basically disagreeing with itself. Tuesday splits hard and the Dow is sitting at a record, while the Nasdaq fell over a percentage, which is a duration story rather than a fear story. Oil's near 75 and the housing stats are dropping over 15%, so the rate sensitive corner is already crackling. Friday is Juneteenth and the markets are going to be shut. The elusive deal signs on that day, so it's the only session of the week that could potentially bite us as we reopen on the following Monday. So quick run across the board. The indices are roughly flat to firm. Oil's obviously selling off a little bit further and faster overnight yet again. Again, I have no separate read on this for today after dropping the ball on that. I just need to kind of reevaluate what's going on there. Despite it selling off and doing what I thought it was going to, it happened overnight, so I wasn't really able to participate in that, despite getting my analysis on the wrong side of that. So the S&P swings stay basically on a tight leash. The MACD V Extreme is basically what I've been using for that read. The data suggests that it's a bull setup for the moment. Now the catch is that that bull read does have an expiry date. It usually takes 1 to 3 days, so basically today, tomorrow, the day after, so basically 3 days or 2 days including today, it depends on how you count, I suppose. But basically you've got a 2 to 3 days grace, where as we come out of that MACD extreme, which you can see at the bottom of the chart, then the bear scenario starts to come back on the table. And to be fair, the Bollinger Bands are catching up with price. We may actually get the bull tag and turn before this less than confident bear read setting on the tag and turn setup basically expires. The dailies are also hitting. If you draw your eyes to the top left there, the dailies are possibly grinding into what could be a new consolidation zone. So we'll see what happens when we have some confirmation there. It's quite a wide zone, so we may ultimately see the volatility continue to play out quite nicely there. On the gamma exposure, Tuesday's close put the flip side down at 7,000 and 7,000. I can't read my own notes here. 73.50. The reading I actually care about is that huge pin bar there that you can just see around about the 7,500 mark, just below where Tuesday closed. It may reinforce that small move down, and that could be the support level ahead of Warsh's announcement. Again, we'll have to see what happens on the open. These things are dynamic, they can change for the day, but just based on the reading before the open, that could be the low of the day. So we might see price just push lower or grind sideways around that level. I don't really see anything screaming at me, but basically that 7,500 does look like the potential floor for the day. We may see price rally. And again, you can see the pins up at the high there at around 70 something. So we've got a really wide range on the gamma exposure for the day. So we could see a little bit of price volatility on jumping around on that pogo stick. Uncle Russell, again, the MACD has been out of the extreme now for 2 days, so we're back in normal territory here. The bear is back on the table and properly available. Price is sitting in now a clear range on the 30-minute charts that you can see there. Williams percentage R is at a bear extreme. We're unofficially using that. Again, I've not got the data to support the combination with this in the current system, but as a standalone setup, I have traded it for many years in the past. And again, what this is suggesting is that we may be seeing a bear extreme and possibly into a bear trend. So again, we'll see what happens. We've got a little bit of conflict between what the SPX is reading and what the Russell is reading for the moment. The Russell is saying bearish as far as I'm concerned. I'm already bearish, keeping those on a tight leash with just those 1 day to expirations. I'm not really trying to get the multi-day swings. We've had some back-to-back wins already this week, so that tight leash is definitely working out. We're right on the low Bollinger Band, so we could see a bullish tag and turn. I like to override things with the range, just personal preference more than anything. If we do see a kind of V-shaped entry at the range low, I'll be bullish, and then we have the breakout pullback scenario, which could ultimately unfold and again reinforce that bearish scenario that I'm currently leaning towards at the moment. I am bearish, I remain bearish. I've got 1 day to expirations running nicely with the bearish pulse bars that we can see on the triangles on charts. Bitcoin is doing its thing. It's biding its time, waiting for the big move to get going. What I want to see now are those higher lows. Now we may see them, the newer VWAP, the rising VWAPs that we can see there, get challenged. Again, we're already down to that kind of first one around the, what is it? Can't find my glasses here. 64,300 approximately, just where that upper purple line is and where the arrow is pointing to. So we're just seeing that challenge for the moment. Again, we may ultimately come down a little bit lower to where exactly that purple arrow is, mainly because that's the kind of like the guiding hand. Again, just looking at the percentage R, there's a little bit more potential for the down move to get to that extreme, which may take us to that lower VWAP. So I'm just going to have to sit through a little bit of a temporary drawdown. And if those get shaken out completely, the 58,500 level, that's where the bull scenario is off the table. and the bear hypothesis gets resumed, and we potentially could charge all the way down to 50,000 level. But for now, we remain bullish. I'm looking for bulls. I'm just waiting for that next confident push higher, and I can start adding in to the position. Over on gold, gold was one that I was, again, half right and half wrong on, mostly wrong. Again, I got the right idea. We got the sideways to down move that we spoke about on Monday and Tuesday's calls. And again, this time it's grinded sideways, just because I thought we'd have the directional move sooner rather than later. I chose a little bit more of an aggressive short strike, which just meant I was just on the wrong side of it by the close of business. I've repositioned myself. So if we get sideways or down, then I should be on the right side of green by the end of business on Thursday. Ultimately, I want to be a buyer on gold. I'll be looking to be a buy around the 42.75 low. That will give me that higher low, and then I can start building into a bullish position when that happens, or if that, for that matter. So to pull it all together, Tuesday split itself in half. The Dow printed a record high while the Nasdaq fell over 1%. The desks are reading that or the trading desk rather, reading that as a duration story rather than a fear story. With the long-dated growth promising repricing as the discount rate kind of twitches. The 10-year slid into a 3-week low on cheaper oil, while the 2-year stayed parked firmly above it. The policy rate and price hiking are into their debut with the very chair that was hired to cut. So the dots are primed at 2, wash peaks at 1/2 and the front end finally finds out whether it was early or simply right. Friday is Juneteenth, the markets are closed, and the framework is meant to be signed, the Middle Eastern conflict thingamabobbity-jiggy that I'm sure we're all sick of hearing about. Certainly from the financial markets point of view. Again, I know me no disrespect to the people who are losing their lives and fighting that war itself, but just from the markets point of view, it's just another day. Maybe we'll see some fireworks in the metaphoric sense over the weekend. So I'll leave you with a line from Kenneth Galbraith, who never lost his sense of humour about his own profession. He said the only function of economic forecasting is to make astrology look respectable. And that's a perfect frame for the 2 o'clock dot plot. The whole room of clever people will spend the afternoon parsing and framing and looking at the framing of Warsh's comments and the gaps between his words, as if the tone of voice settles where price goes next. And maybe it's a bit more of, tongue-in-cheek when it comes to this sort of thing. It doesn't really change my job. The data gives me a bull setup or a bear setup with an expiration date. And it really just, is a case of following the data and having faith in the strategy, regardless of what the mainstream media would have us be scared or fearful about, or euphoric about, for that matter. Finally, a little bit of a fun fact. Kevin Warsh joined the Federal Reserve Board in 2006 at the age of 35. He was the youngest governor in history, in the introduced history, and he did it without an economics PhD, carrying a law degree from Harvard instead. And a little bit of fun, just the meme of the day. And that's really it for today. Everything really is just throat clearing until 2 o'clock, so I'm letting the room read Warsh's lips while I read the tape, follow the setups, keep your sanity, and I'll see you on the other side of the dot. So happy trading, and may your trades be smoother than a cashmere codpiece.